Yo, what's up, everybody? Friday, TGIF. All right, let's go over what's going on. A couple of things. First of all, economic data today. CPI up 0.5% is the highest, fastest rate in 5 months. You will see this continue to increase. All right, this has been a very slow, quiet increase in inflation. Most people are not buying into the whole inflation outlook. As you know, I have been very steadfast on this. Even the Fed, remember Yellen and her crew over there, they're like, we don't understand inflation. They do not understand their role as price setter. It's very, very obvious. And, you know, this just boils down to mainstream economics. I mean, they do not understand economics, basically. And the central banks have all been schooled in this kind of junk economic theory. They don't see their role as price. I'll give you an example. Look at Russia, right? Back in, what was it? I guess late 2014, after the U.S. and Europe levied all those heavy sanctions against Russia, you had a kind of a run on the ruble. It was ridiculous, but in response, the Russian central bank, actually before the run actually happened, it started to go, the ruble started to get hit with some speculative selling, but then in a kind of a panicky reaction, the Russian central bank, led by this Nabulina woman, who is a 100% Western educated economist, completely an adherent to the neoliberal line. You know, that's all this Western junk economics of privatization and monetary policy and that whole thing. She jacked up interest rates to 18%. That really sent the ruble down. But then, beginning in early 2015, she started to cut rates. Now, everybody, back then I said you got to buy the ruble. It was up around 80 to the dollar. And they've had a series of rate cuts, which mainstream economics and people at the Fed and all these academics, they would say, oh, that would tank the ruble. What happened? The ruble has strengthened and inflation has come way, 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 way down. All right. So, and there's another example of the empirical evidence completely in the opposite direction of what the academics and the economists of today would have predicted. But nobody says, hey, we got to go back to the drawing board and examine this. So here you have the same thing. The Fed, nobody's buying into this whole inflation scenario. They've been raising interest rates slowly, yes. And that is the only thing that has really kept inflation under control, but it's still rising from where it was. If you look at it back at the beginning, right before they started to raise rates in December 2015, has been a clear trend upwards, all right? So that, number one, happened. You had retail sales also in September at the highest level since 2015, the increase. So you have that news, all right? What happened? Dollar went down on that news. Gold went up, but the dollar went down is interesting. You also had bonds rally on that news. Now, that might seem counterintuitive to most people, but the bond market is sort of leaning on the Fed. And the Fed said, basically has taken the position that, hey, only 3 more rate hikes out through 2020. We're getting close to where we need to be at the so-called neutral rate, which I've explained to you is ridiculous. The only neutral rate is the 0 rate. But the Fed is going to raise in December, and they're going to raise some more next year. And bond market will get it. Right now, you got to be selling bonds, and you just have to be patient. Now, the next thing that I want to talk about, something pretty important, is Trump's the Obamacare subsidy cuts, all right? He has ended the subsidies to insurance companies. Now, I don't know what the total value of these cuts represents. I know that marketplace payments, that's the total amount of subsidy that the federal government paid out in this just concluded fiscal year, That came to $46 billion. Now, if that is the total amount of cuts that will be impacted by Trump's actions here, that is very, very significant. All right, that is significant in a number of ways. I sent out several emails about this morning to MMT Trader subscribers. If you want to get these emails, all right, and if you want to get the new edition of MMT Trader, which I will be working on over the weekend, then go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. If you want to get zombie trading, go to the same website, Pitbull Economics, and get a 30-day free trial of zombie trading. So, what we need to find out if these cuts equate to the full amount of marketplace payments or subsidies that the federal government made in the last year, which is $46 billion, that will have a major, major impact. There are some other things that might offset it. Or, for example, we have the disaster aid that Congress just passed. I think it's up to about $36 billion. And Social Security will be going up by 2% this year. That's about $17 billion. So that, you know, the whole thing could be offset by these other things. But we need to know these things, and we will know them. MMT Trader subscribers will know them because, you know, I follow the daily Treasury statement every single day. I see the flows, all right? So if you want to get in on this, if you want to make some money on this, trading, investing, what have you, then go sign up for a 30-day free trial of MMT Trader. Go to pitbulleconomics.com and get the 30-day free trial. All right, everybody. See you later. Bye-bye.